In stocks, it's an important time for commodities in the global scenario. Joining in to make sense of the dynamics in the crude space in particular is one of the foremost authorities on energy, geopolitics and the global economy itself. It's my pleasure to welcome Daniel Yergin. Not just that, well, Daniel is also a best-selling author, winner of the Pulitzer Prize for his book, The Quest, Energy, Security and the Remaking of the Modern World. Time magazine says of him, if there is one man whose opinion matters more than any other on global energy matters, it's Daniel Yergin. Daniel, thank you very much for joining us. Well, first things first, what did you make of the recent landmark OPEC decision to cut output?
I think that all the oil countries are feeling the fiscal pressure after 2 years, and it applies even to the Middle East countries. And I think they realized that if they did not come up with an agreement, then they were going to look at much lower prices, and it would be much harder to come together to do an agreement. So finally, they came together and made an agreement, and it may well rank as one of the historic OPEC agreements.
Daniel, good morning, and thank you for being with us. What do you have to say about the OPEC countries who are not yet complying with this new deal?
Every OPEC agreement has members not complying. This is, after all, only a 6-month agreement. They're going to do something new. They're going to set up a committee of OPEC and non-OPEC countries that will kind of monitor and try and be transparent about what countries are doing. So I don't think you need perfect compliance to achieve their goal of trying to balance the market by next spring. But I think compliance is always an issue. But I think that they're determined to do it. I think that there are also a couple of new things about this agreement. One is a degree of cooperation between OPEC and non-OPEC, and in particular Russia is playing a very important role. And secondly was the fact that they were able to work out a compromise with Iran, and that was the thing that was really until the last minute was a stumbling block to getting an agreement done.
Daniel, good morning. So how important it is for the non-OPEC to join OPEC, countries like Russia? How important is it?
I think this time it was really essential because the country that's had very strong growth in output has in fact been Russia, and Russia is now the world's #1 oil producer. And so, and I think for their part, there's been long discussions over most of 2016 about Russian participation. And Russia was feeling more and more the pressures on their budget. And so I think that they were also very keen to see an agreement. The other OPEC countries will give smaller contributions, but Russia's a key player here. And Russia, I think, played a brokering role between Saudi Arabia and Iran. So Russia has been a very important part of this agreement, and that's new.
Okay, and also telling, of course. But Yergin, let's talk about the US now and the kind of resilience US producers have shown even to the lower prices now with the OPEC output cut coming and the prices gaining. It just about sweetens it up for them, doesn't it?
I think that one of the surprises for many in OPEC was the strength and the resilience of US shale producers. But now, after 2 years, you can see the impact. U.S. oil production is down more than 1 million barrels a day, but people thought it would be down much more than it is. And these producers now have become more efficient. They have continued to push their technology. They're more focused. They've changed their operations, and so they can operate at lower prices. And I think if we're going to now see oil over 50 and even at $55, you're going to see activity start up again in the U.S. oil patch. And as it starts up, the U.S. production will start to go up again. But I think that unlike 2014, the OPEC producers now realize and accept that U.S. shale is going to be part of the larger picture. And that wasn't clear to them in 2014.
Okay, how would you term the relation of the U.S. with the OPEC countries, especially after the election of Donald Trump?
I think it's still to be determined what the U.S. relationship with the various OPEC countries will be. Clearly, Donald Trump has made very explicit his criticism and opposition to the nuclear deal with Iran. And so I think that in itself raises tensions and concern. Are there going to be new sanctions? What's going to happen to the Iranian oil agreement? As for relations with other OPEC countries, I think that kind of will continue on a pattern that they were. In fact, some of the Gulf countries were happy to see Trump elected, even though he's been critical of Muslim immigrants or immigration, because they also see him as being tougher on Iran. And for many countries on the Arab side of the Persian Gulf, that's the #1 issue.
So what can we expect in terms of prices now going forward, and what would you want to watch out for? Because the volatility has been quite high. We've seen 1 to 5% of a move on a daily basis almost, and there are still a lot of events that are slated out.
Well, certainly you've seen a very positive, maybe even more positive than might be expected, reaction to the OPEC agreement in terms of price movement. And that means that at least so far, the market is taking it seriously. But I think over the next month, we're going to see actually production go up from countries, because the agreement does not go in effect until January 1st. So people will probably produce as much as they can, and that will mean volatility in the price. And you'll see doubts whether the agreement's going to hold or not. But I think this does move us into a $50 to $55 range and gives a chance to get through the winter without building additional inventories, so that when you get into the spring, you could start to see the market being more in balance again. So I think this was a decision that wasn't meant to dramatically change what was happening in the market, but rather to speed up the rebalancing. And so far, the price indicates that the market is taking it seriously.
Okay. Yergin, how do you see the OPEC move for Asian markets, especially for a country like India, which is such a huge importer?
Well, I think that it's become very clear that India has taken on much more weight in the global oil market. And when you look out and you see that between now and 2040, perhaps 1/4 of the total growth in world oil demand will be in India, that this year India will overtake Japan as the 2nd largest consumer in Asia. It will be the 3rd largest oil consumer in the world. India's taken on real importance, and I can see that the oil exporting countries are much more focused on India than they've been in the past, and they're looking to India to be the growth market, and are asking themselves, how do they get more engaged? How do they participate in this market? So I think India looms larger and larger, both in the oil market and also in the global natural gas, the LNG market.
That's important. Yergin, it was a pleasure speaking with you. Thank you very much for stopping by at CNBC TV 18. Well, that last bit that Mr. Yergin says is very important.